Why do you think people need to be paying attention to what's going on in these global markets?
Well, Kelly, I think, look, we are, as a firm, we're either famous or infamous, depending on which side of the coin you come down on, in terms of thinking that there's a broad range of asset bubbles going on right now. And what bubbles tend to do is they make investors very myopic. They begin to think that there's only a small universe of attractive opportunities. And what we've been trying to tell our investors is that there's plenty of things going on around the world, and it's just that people are ignoring them. And the graphic that you showed, really points to that there are any number of different countries, any number of different size categories and things like that people just are ignoring right now.
But it's ironic to me, Rich, that you would say, the NASDAQ might be in a bubble, but Saudi Arabia looks great. Contextualize, some of these countries where you're saying, hey, this is a fundamental opportunity here and not something that when I look at it, I think maybe it's a global liquidity bubble.
Right. Well, I don't want to lead people to believe that we have positions in Saudi Arabia, because we don't. That's really kind of a generic statement that there's so many things outperforming. But where we do have positions and we do have plenty of weight in our portfolios is in things like small cap and mid cap companies in developed markets around the world. They've been performing very well, and it's very fundamentally based. A lot of people have talked about how Europe and parts of Asia are cheaper than the United States, but what very few people have talked about is that the fundamentals are actually improving there too. So if you can get cheap assets where fundamentals are improving, historically that's been a pretty good combination.
Let's talk a little bit about where the bubbles are right now, where you see them, and what usually happens when people invest in a bubble.
So Tyler, I think the bubbles are all over the place when you have pro football players endorsing cryptocurrencies and mayors endorsing cryptocurrencies. I mean, bubbles, people use the word bubble too often, but bubbles pervade society. They go outside the financial markets. And I think in a lot of cases right now, we are seeing that pretty clearly, that bubbles are pervading society. So what happens? I think one has to step back and differentiate between the bubble and the investment opportunity and the economic story. So let me give you an example. If you go back to the tech bubble in 99 and 2000, there were lots of promises made, and Tyler, you and I remember these very well. There were lots of promises made about how the internet and cellular communications were going to change the economy. And in the next decade, they did. They completely revamped the economy. But if you invested in NASDAQ in December of 99, which was a full 4 months before the bubble peaked, you didn't break even for 14 years. I'm going to guess that there aren't too many people investing in cryptocurrencies or in technology and innovation disruption today who are saying, nah, I'll break even in 14 years. It's all good. That's not what they're thinking. They're caught up in the stories, not in the valuation of the assets.